All right, so today I want to talk to you about a topic that I'm being asked a lot about, and that's the topic of life insurance. Full credit, I'm not investing or owning any life insurance myself, and as you will see during the course of the video, I'm personally not a big fan of it. However, I understand that some of you may like it or consider getting one, so that's why I thought I'm going to share with you my thoughts on it, and then we can, have a discussion in the comments, and who knows, maybe I'll learn something from you, but so far, with all what I've read and heard about, I'm just not convinced in having a life insurance. However, at the end of the video, I might also propose in some certain scenarios where a life insurance could potentially make sense for you. But first off, I think it's very important to clarify that a life insurance, at least in my eyes, is not really an investment. So when people compare, should I invest my money in the S&P 500 or life insurance, I think it's not really fair to compare because it's not apples to apples. I mean, those people who are really seeking to have a life insurance, they do it more for protection purposes, insurance purpose. The same way how health insurance is not an investment, it's just to keep you safe and protected from a potential expense that might come your way in case of an accident, what have you. The same is for life insurance, right? You're kind of betting against yourself. You bet on dying potentially early, in which case, of course, your offspring, your family members, whoever is there might get a nice payout. And for that, it makes sense, right? So you can say it is a nice way of planning ahead and look after your family. Then potentially it might be a way to add to your other investments. But once again, I think it's important to clarify, at least in my eyes, it's not really an investment as such, even though, yes, technically your money grows over time, but as you will see in a second, way less than it would be in other ways. Now let's talk about a couple of things why I'm personally really staying away from the life insurance business. First off, I know quite a few people who are doing this full time and selling life insurances. And if you're one of them and watching this video, I'm not saying it's a scam or anything. Some people go that far. I wouldn't say it's a scam. It's just not something I personally invest in. And the beauty of investments, there's so many different options out there. So don't feel personally attacked if you are one. But when I look at it objectively, knowing that how much of a bonus and incentive those agents selling life insurances can get, it can get up to 1 year of the total premium. So imagine your premium or what you pay for the life insurance on a monthly basis. Again, it depends on which one you take. And there's so many different out there, right? There's term life insurance, there's universal life insurance, and there's even whole life insurance. So many different ways, and all of them have different price tags. But let's imagine you pay 200 euros a month for your life insurance, and take that number times 12. So that comes to 2,400 euros in a year. And in many cases, that can be the commission for the broker just by selling you that life insurance. So that's a very attractive business. That's why you see so many people out there pushing it so hard. And that already shows me there's so much fat on the bone, and it just shows there's inefficiency, right? Because that money basically doesn't work for you because it goes into somebody else's pocket. And I always want to see, if I compare it as an investment class, right? I want to have the money working for me harder and growing faster. And obviously that's not the case, because all that money the first year basically directly goes into the broker's pocket, and then later on the insurance company wants to take a cut from it as well. So that brings me to the second point, and that's the high fees, or better say the ambiguity of fees. Because often when you go on different life insurance providers, you will actually see a lack of clear instructions, clear numbers. And that's for me so frustrating. When I make an investment in many other asset classes, I see the cost of it, I see the fees, I see all the things I need to have for it. In life insurance, it's almost impossible to have apple-to-apple comparison. That's why, once again, you need to go to a broker. They will then make a big fancy analysis, many spreadsheets and what have you. And in the end, you kind of hope you're going with the right one, but it's really not very transparent. And again, I don't like investing into things I don't fully understand. And I equally think not everybody 100% understands the entire business model, so to say, of a life insurance. But ask yourself that when you go to a capital or big cities, you see a lot of those high-rise towers. Often it's either banks sitting there or insurances. So it just shows you insurances is a very good business model for a reason, because obviously they using a lot of your money and charging some fees that I don't think are really justified. The second point is, for me, the unnecessary complexity and lack of transparency in many ways. A lot of people really don't know what they're getting themselves in and have no ideas about the fees, the returns, and all the benefits they can get out of it, or the lack thereof. So I think that's a big problem. And once again, people are blinded. They kind of get sold by those brokers, right? And those brokers, obviously, they have the interest of closing the deals. They might not really tell you all the things you need to know about. You probably are not a lawyer to read all the fine print, right? And in the end, you just log it in, and then you're committed for many, many years of having to pay those monthly payments. That's definitely not something I want to be doing in the future. The third point is the poor investment returns. Now, as I said before, you shouldn't really see it as an investment. If you do nothing else with your money and only put in life insurance, that's actually not investing your money. That's one way to allocate some money and kind of force saving in a way, which might be considered a good thing if you're really overspending on every other month. At least you're saving towards your life insurance. So in that way, it might have some benefits. We'll come back to this at the end of the video. But overall, the investment returns, once again, are very ambiguous. They don't really tell you how much you can expect or what they're investing in, where they're allocating your money. So once again, there's a lack of that. And second of all, there has been many studies internationally, and most of the life insurances, on average, once again, it's really hard to say, obviously it depends on which country and which vehicle you choose, but on average, they return anywhere from 2 to 4%. And that's annually, right? Now, if you compare that, for example, to the S&P 500, which returned anywhere from 8 to 10% annually, you see you're really missing out long-term from the compounding growth of your investment, of your money that you put there, right? And again, ultimately, I want to see my money grow. While it's nice to have that insurance, knowing that my family would get, in the case of death, all the money and so forth. Same time, if I allocate it into the stock market and let it compound and grow over time, it might be worth so much more. They might even benefit even more from that. So that's just something to keep in mind. And I just prefer seeing that money, knowing where it goes, what it is invested in, rather than sending it to some institution, some insurance company, completely anonymous, hoping they will do something right with it. Another big drawback that I see with life insurances is the liquidity access, right? You can't really access your money in many cases. Now, once again, different insurances, they may allow you per year a certain amount that you can withdraw from it, but you probably have to then pay it back afterwards. And for me, I never liked it. I really appreciate flexibility, right? The same way how I have my cash sitting in a bank and never lock it up, right? I could have another 0.5% more at my bank if I committed that money for 1 year over there, but I never want to do it because I don't know what will happen tomorrow, right? Maybe we go in a bear market, all the markets go down, we're in a recession, and things are going bad, my business goes bad, YouTube stops working, and I need that money, right? If it's all locked up and committed in different institutions and banks and life insurances, well, even though I technically have money on my spreadsheets, I don't actually have it in real life. And for me, that's so important, right? And worst of all, of course, we're not hoping that scenario would happen, but worst case, I could sell at least a portion of my S&P 500 holdings or my Bitcoin or other things. I can just sell it, even potentially at a slight loss, but then I have money to work with, to pay my food, to pay my rent, whatever I have to. But in life insurance, in many cases, once again, unfortunately, you won't be able to do it. Now, there might be some penalties that you can pay to get an early payout and what have you. But yeah, in many cases, as I said, it's very difficult to get an early payout. So your money is locked up there, and I'm really not a fan of that. The next point has to do with the misalignment of interest. Now, I said before, the brokers are obviously, the agents out there and pitching and selling all those life insurances to you. And once they sold you, often what they will ask is, what about your family members? What about your friends? And they start going around your circle as well. And that just shows you how aggressive they are for the commissions to get the sale done. And for them, it's all about the sale. They're not really interested in what insurance you have and if you renew next year, because they make money once on the sale and that's it. And they move on to the next. And in many cases, actually, they're incentivized to upsell, right? Once you bought one product from them, they might later on come and sell you another insurance for the car or for the health or whatever, to kind of sell you all these various insurances. Why? Well, once again, as I said, because they get a hefty bonus. Look, I, of course, make also money from YouTube, from, for example, brokers, right? When anyone signs up with a broker, I get a little kickback, but in many cases, you guys also get a bit of money. So, of course, everyone has a financial incentive to get new users. That's normal. But we talk about here tiny numbers. They are a fraction of a fraction of a fraction of what such an insurance broker would get. I mean, we talk about, maybe 20 euros, maybe some 30 euros, but, really reasonable one-off payment. And why? Because the money that the broker will make on you on long term and thousands of euros, right? In many cases, they don't even charge you a commission anymore because the fees become so competitive. It's so transparent. You can compare so many different brokers, which once again, to my previous point, that ambiguity, lack of transparency in that industry makes it so difficult to compare and you don't really know what you're getting. So here, for brokers, they have to be really price conscious and they can't pay you out hundreds or thousands of euros as benefits, but they can do for insurance brokers. So for me, it's just a misalignment of interest there. And that brings me to my last point. If I would compare a life insurance to, for example, an S&P 500 investment into an ETF, right? As a simple example. Now, there are other investment classes that you could allocate your money to, but I think that's a very common one. That's what I do as well. And I know many of you watching like to invest into a low-cost index fund, which probably is one of the smartest way to invest your money. And once again, when we look at the performance that those two deliver over time, it's a glaring difference, right? While you have 2 to 4% with a life insurance, on the other hand, you have 8 to 10% with the S&P 500, for example. So if you take that over a 30-year period, depending on how much you invest invest in your insurance every single month, right? It's hard to generalize, but for some of you, it might be 50 euros. For some of you, it might be 1,000 euros, right? I've seen really high premiums, and often those premiums, they even go up as you age. If you have a whole life insurance, that premium, what you allocate every single month towards your life insurance, that becomes ever more expensive the older you get, because obviously more likely to pass, right? So that's really interesting to think about. And that way, when you compare what you could have in your portfolio, if you put that money into an S&P 500 investment over time at double the speed, a rate of growth, while being able to withdraw, that's just a crazy difference of the number you would be getting. Again, depending on your numbers, I really recommend you use an interest compound calculator to run your own numbers and see what it could get to. But you could have multiple millions in your portfolio with an ETF if you started early, right, over 30, 40 year period, versus with a life insurance. If you have a term insurance, for example, and you don't pass away by the end of it, some of them, they don't even pay you back the amount. Now, some do, some pay you partially back, some only pay you back the amount that you actually allocated, but without the interest, right? So you'd only get the actual money. So technically, over 30-year period, you lost a lot of money to inflation as well. So however you look at it, financially in terms of returns, it's nowhere close to the performance you could be getting with the S&P 500. Otherwise, why would people invest into S&P 500, right? If the life insurance was so great and could guarantee you all these things, everybody would be investing their money in there. But it just shows you, I think it's highly inefficient. Too much of your own hard-earned money goes into other people's pockets that are happy to have your money, but I think it's not in your best interest. And I think there could be much better ways what you can do with your money. Now, let's talk about some of the cases why it might potentially make sense for you to have a life insurance. And again, I'm not really recommending you to have one, but what I could imagine, for example, if you have someone in the family or maybe one single child that is having disabilities or can't really work or really struggles in life, then potentially that might make sense. If you're also getting older, you might want to take up an insurance. So in the event that you pass, that person just gets a payout, either a lump sum payout or a monthly salary that is paid to them to look after their living needs, so to say. So in this case, I could imagine that as a scenario. Another scenario, what I mentioned earlier, what I like about life insurance is, in a way, it's forced savings, right? Because a lot of people have difficulty of saving money and investing it, right? As soon as they have too much money at the end of the month, well, they're going to buy something or book a trip or whatever, but investing into the stock market, that just would never, cross their mind, so to say. But if you have a life insurance for 20 or 30 years, you better continue paying. Otherwise, you're going to break your terms and then you're not getting anything and you waste all the money that you previously invested. So in that way, it's almost like forced savings. Yes, you're definitely not getting as good as a return as you could get in the open market if you invested into a thing like S&P 500 or others or real estate, whatever you have to. But again, for those cases, it might make sense to potentially consider, even though personally, I still would think, rather fix your money management issues and focus once again on optimizing and maximizing your money with different investment classes rather than trusting it to others and enrich them in the process rather than yourself. So you see, I have a very clear opinion on the topic, but at the same time, I know some of you may either have a life insurance or are selling life insurances. And again, I have nothing against it, right? It's a legitimate product. Obviously, this has been in the market for many, many years. It's accepted around the world. So I really wouldn't call it a scam. I just don't think it's the best way that you can allocate your money towards. But if you feel comfortable with it, similar like a health insurance, right? You really see it as a family protection, then by all means, go ahead. But I would still urge you and recommend you still want to be in a position that you can manage to carve out some money that you can allocate towards other investments with a higher return. For example, of course, the S&P 500 or other investment classes that bring you a predictable higher return than some ambiguous life insurance. And once again, right, if you invest early and allocate money towards that, over the years, and hopefully you live many, many years, a healthy, happy life, right? That's what it's all about. That's why I invest also so much into my health, to live longer, right? I'm not planning to die tomorrow. I want to have a long, happy, healthy life. So if I grow and then over time my portfolio grows with me, and then many, many years from now when I pass, right, that portfolio is a big size. Then what I will do, I just write it into my will. Who is going to get it? My family, my wife, my kids, my whoever needs some of the money that I see fit. I will write it in the will. They know where the money is and they can access it. I just have to write to the broker and the broker will pay it out. So it's so simple. I will save all those fees and all these kind of bureaucracy. And I even heard of cases where the life insurance refused to pay out the full amount, right? Because they found some things that they didn't like, whatever. It's always the case with insurances. You're never 100% sure you're actually going to get your money, right? Try claiming something with your health insurance. In many cases, they will actually, reject your claim, right? It's the same I heard with life insurance. So I think having a stock portfolio, real estate portfolio, these are really tangible assets that you can then inherit to other family members that you're still looking after them, right? Once they get it, they can do whatever they have to with it. They can sell it, liquidate it, or keep it and continue growing. So I think it's a better way of investing. But once again, that's my personal opinion. Let me know down in the comments below what you think about the topic of life insurance. I hope you enjoyed the video today. If you did, please give it a like. It helps the video to be seen by more people. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.